In 1950 to make oil from coal for the South African market. Today, Sasol uses coal, oil and gas reserves to manufacture and sell liquid fuels, fuel components and chemicals throughout the world. Market cap of 382.8 billion rand, PE of 11.8 and a dividend yield of 3.2%. I found out a very interesting fact yesterday, actually, in that David Constable has been seconded to Sasol for a short time period. So I think he's got about another 2 years. I stand to be corrected, another 2, maybe 3 years in his contract. Did you know that?
You know, I think that may have been qualified recently. When he first arrived, he took the job. He was with Fluor before, Fluor Daniel, which is a major global engineering and consulting firm that builds plants like Sasol's Secunda plant and like the one that they want to build in Louisiana. But I've got a feeling that they confirmed his contract as the full-time CEO. You remember a couple of weeks ago there was a little bit of noise and press about the extent of his remuneration, which was quite high. And I think that was on
What do you say? It's longer than the contract?
I think it's been extended, and I think he's been given a permanent
so I got
position.
It wrong.
And I think he decided, hey, Johannesburg's such a fabulous place, why would I want to live anywhere else in the world?
Wow, I'm so behind the times. I've got to relook at my job.
But wait. You know, for the last 2 years, we've discussed this stock on this show. You always keep hitting on us, saying that this is a boring stock and everybody owns it and it's over-owned and so on. But look at that. It's gone from that, 350, 360 mark right up and crested 500 recently. So it's definitely beginning to work.
Quantitative easing. What can I say? Liquidity, momentum.
I'm starting to get worried about you. No. What's going on here is production. Production out of Secunda. Every year it's like 4% higher, 4% higher, 4% higher. And you know, Secunda produces liquid fuels out there on the plains of Mpumalanga from coal, but what it actually is a money printing machine. The margins there are incredible because the coal input is relatively cheap and oil prices are relatively high, petrol prices are high, they be making.
Doesn't the future of this company hinge on the gas proposition?
It does. So about a decade ago, they went and built a plant which took a while to get operational called Oryx, which is in Qatar. A very expensive plant.
Yes,
but it's a nice little plant. It's like a 30,000 barrel a day production refinery oil equivalent. They had some problems on startup, but they have proved now unequivocally that they are the company that has the best expertise in the world to convert either Mozambican gas or Qatari gas or any kind of gas into liquid fuels. Because it's all very well to say, oh yes, we can do that because we've got the technology in a lab. But to do it at scale every single day is truly impressive. So really, I think Sasol is poised for a major, major surge in years to come. Why? Because they're going to build a similar plant to Secunda and Qatar in Louisiana.
And that's the one that's going to take a lot of capex.
Let me explain the background to that plant quickly.
Please do, with your engineering background. And I won't interrupt Paul because I know that you get very upset with me when I interrupt his engineering soliloquies.
So a few years ago, well, many years ago, they bought a company called Condeo, which was a German chemicals producer out of Germany, which
You do know that we've only got half an hour for the show.
Owned, incidentally, a chemicals complex at Lake Charles, which is on the Louisiana coast. It's where, the rivers and the Gulf of Mexico all sort of come together. Not a terribly nice place to live, lots of chemical plants, but that is the site where they're going to build a plant to take gas, shale gas, any gas from over the Gulf of Mexico, because there's a major interconnected gas network in the US, and they're going to turn that into liquid fuels. Why? Because in America, there's a bit of crude around, but there's a lot of gas associated with the crude fields, which is now going to come on, and it's very cheap, so the margins for Sasol are high.
Where are we going at the end of the day? Because you say that we're going to see a major re-rating on this share.
Yes.
Can you give me a time, please? And
look, that's tricky.
A price target.
Let me tell you why it's tricky. Because I might stand here and say, well, they're going to build a major gas plant. Do you know how much that thing's going to cost?
Oh, I told you, capex.
Potentially,
it's going to be so expensive.
$20 billion.
I know.
That's 20
That's
with a B.
That's where I'm saying heed caution.
In dollars, American dollars. So the problem is that kind of expenditure is roughly equivalent to the company market cap we were talking earlier. So that's the deal.
A big risk.
I think what they'll do there is they'll start with the components of that plant, and they'll produce ethylene and all the other bits and pieces, sell it to the chemicals producers and do all sorts of downstream stuff. They'll take it carefully. They've got the right kind of profile in the US market. They've been listed in New York. They can raise money from the corporate bond market in America.
So that's called a block and a bridge. I ask you about the time horizon and a price target, and you take me to Louisiana.
So we're talking about benefits that will only come to the fore in like 20 years' time. But the process, I think, of getting there will be handled carefully because David Constable, top CEO, understands how to do the project work, also understands the numbers, the investor relations. Why do you think they sold that chemicals plant in Iran? Because you can't have a business in Iran if you're serious about being a business in America.
All right, and I just want to set the record straight. So David Constable is there for the long term. Paul, you've just clarified that. That came out recently.
Yes, but who's not there for the long term is a big part of his management team. Did you notice they've all been leaving, including Christine, Ramon? Everybody seems, if you look at the management team, it's like Constable, and then vacant, and then a guy running Secunda, and then vacant again, and then a person doing strategy, and then vacant again. So there are some issues there. But I don't see that as a major problem.
And not for today's discussion. Hot or not?
One last point.
Yes,
One last point.
Yes.
Why this is hot is because the further along they get with the Louisiana project, the more attractive they come to the oil majors in the US. ExxonMobil, Chevron, Texaco. All those big people will look and see, here's this company, Sasol. It's cheap. It's only got a market cap of 300 billion rand. I could buy that with the petty cash. So that possibility becomes attractive further down the line.
It does.
So
Hot or
definitely
not?
hot.
Hot.
Definitely.